Oh dear.
All right, welcome back. We're gonna be here till about 10 of 3. And we're switching gears here just a little bit because we've asked in Chris Delia from the Bankers Association, and we have Joe Bergeron, Craig Haar from the New England Federal Credit Union, and just from the Association of the Credit Union. And with a focus, not only, first of all, a focus on who you are,
Yes,
what you do in this building,
yes.
and what information we can glean from you, and then a little bit of a conversation about, I'd like to have a little bit of a conversation about, because we've heard, for instance, a developer wants to develop a project and they're having issues with how difficult it is to get a loan and what risk means and what the risks are for somebody, whether they're building on spec or whether they're building for, per order. So just a little bit of an introduction to that, because we're going to be dealing, I think, there's going to be legislation that I'm aware of that we're going to be asked to deal with, creating loan pools that developers can tap into. And like anything else, you're like, is there enough money in the world to do that? And is the risk too high and Chris has been in our committee for as long as he's visited our committee on many of the general issues that we have, the portfolio that we have. And he has been, as has the representatives from credit unions in the past, they have been very helpful in understanding things. And I'll use an example. Several years ago, we were working on a bill that was going to be, it was called the Homelessness Bill of Rights, the Homeless Bill of Rights. And there was this series of provisions in it that we wanted to make sure someone who did not have an address could have access to banking, for instance. And then one day Chris showed up and I was like, oh, what did we do wrong? And what it was a conflict with federal regulations. And they're slightly different for banks than they are for credit unions, but they're still federal regulations that we could just say, do it our way. And it ended up, the bill didn't pass, it hasn't passed yet, but it was really helpful in terms of being able to come to Chris and decipher or ask him what federal rules are we going to run up against, is actually, for this next biennium, as we're focusing as much as we are on housing, is going to be really important. So welcome, Chris.
Thank you. For the record, Chris Delia, President, Vermont Bankers Association, 20 years with the organization in this building, actually 30 plus years in this building, and with my hat on is economic development, both at the state and local level. So it's been a long time working through many, many legislatures. Very quickly, a summary of who we are and a summary of the industry, and then I'll jump into the housing piece. So we're like MAD organization, we're a membership-based organization. We just happen to represent the banking industry in Vermont. My role as president is to focus on advocacy, which is working with you folks, but also our congressional delegation and other organizations or governmental entities in Vermont, education of our members and products and services. 25 member banks are a part of the association. So every bank that has a physical presence here in the state of Vermont, so bricks and mortars, branches, et cetera, are members of the association. There's many others out there in the ether that provide access to financial services, but the 25 are here. 7 state chartered, and I'll talk a little bit about the difference between a state chartered and a nationally chartered institution. 18 nationally chartered, range in size from 80 million to 10 billion plus. So from the smallest of the First National Bank of Orwell up to the TDs and the M&Ts. And there's space in the marketplace for all of them, because a large institution has the capacity to work with the state of Vermont, the state colleges, Vermont Housing Finance Agency, and others, whereas the smaller institutions may not have that capacity. So we need banks of all sizes.
So quick question on that. So I'm going to take a look at Chittenden Bank, which just in the last 20 years has been
long gone.
Right, but it's been Chittenden's Bank, it's been People's, and now it's M&T.
Yes.
What is the motivation for that?
Well,
Either for both sides. What was the motivation for Chittenden to sell to Peoples or conversely Peoples to buy Chittenden? And then is that fit into the larger, the safer?
So I think you'll hear a little bit about this from Joe's presentation as well. We've seen a lot of mergers in our marketplace over the years. I do a presentation at our banking school, and I go back many years where we had, 10, 11,000 banks in the country. Now we're down to just over 4,700 banks in the country, and that's primarily through consolidation, some through closures during the Great Recession. The issue is, how do you survive in the marketplace and growth, being able to serve the market, being able to invest in the institution and the technologies that are needed? How do you comply with all of the regulations that are imposed on institutions? And for some, it's very difficult. It's a challenge. So you either have to grow or you position yourself to be acquired. If you're the acquiring one, maybe it's because, again, you also are positioning yourself for growth, but you're looking to get into a market area. And one way to get into a market fairly quickly is to buy an existing entity within that marketplace. It's a bit challenging because what you're losing are those back office operations that we have had in the state of Vermont. And often they become branch operations. I don't want to diminish the people who are in those branches because they're still Vermonters. They still care deeply about the communities that they serve and the customers they serve. But this is the nature of the financial services industry. Consolidation has been going on for years. I think it will continue to consolidate. It is frustrating for, I'm sure, customers at times at the local level because they want their local bank. And that bank may not exist anymore because it's been bought up by another. So it's just an evolution in the marketplace. We not only have Vermont-based institutions, so National Bank of Middlebury, Vermont-based institution, Orwell, Vermont-based, et cetera, but we have institutions that are based out of New Hampshire, Maine, Massachusetts, and New York. Interstate banking had a lot to do with that. You could cross state borders, you could set up branches and operations in other states. We also have 2 independent trust companies in our portfolio, about 240 branches around the state, 2,800 employees, average wages just over 48,000, and extensive benefit packages. I think, again, you'll probably hear this from Joe. Aside from the insurance and the healthcare industry, the person sitting before you representing our industry is one of the most heavily regulated industries out there in the marketplace. And rightly so, when you think about the work that we provide to our customers, the services we provide, and the information that we collect as necessary by some rules and regulations. So you want us to be regulated. We also want to be regulated. We want to know what's expected of us in the marketplace and working with our regulators. Those are both state and federal regulations, typically in the area of deposit and lending, but we also have many other regulations that run the spectrum from consumer protection, privacy, even to service member protections, which I know military affairs is now elsewhere, but there's a whole section in federal statute that tells us what we need to be doing when we're working with members of the military, both retired and active service. A primary regulator, just so you have a sense of what that means, we have regulators that come in on an 18-month period, on a 2-year period, on a 3-year cycle to look at our institutions and examine the work that we're doing in comparison to the regulations that we need to follow. So whether it's Bank Secrecy Acts, whether it's a technology examination, whether it's a safety and soundness examination, our regulators step in on a regular basis to make sure we are complying.
Chris, are those state regulators or federal?
I'm going to go through that right now. They're both. So a state chartered institution, let's focus on that. Passumpsic Savings Bank, a Union Bank in Morrisville as examples. Those are regulated by the Department of Financial Regulation here in Vermont, okay? We have a state-based body of regulation in Vermont statute that governs how they function. They are not the only regulator for that institution. They are also regulated by the FDIC, Federal Deposit Insurance Corporation. They could also be regulated and choose to be regulated by the Federal Reserve Bank. And there's one down in Boston. There's 12 around the country. If I'm a nationally chartered institution, Then I'm looking at the Office of the Comptroller of the Currency. However, I still have the FDIC. I still have the Federal Reserve. I also have the Consumer Financial Protection Bureau, which can play in our world as well. We have the FFIEC, Federal Institutions Examination Council, which works with our regulators on the examination procedures. If I'm a stock institution, I also have the SEC, Securities and Exchange Commission. And I threw in the FTC just for illustration purposes. You folks did a robocall bill last year, and that's governed by the FTC, and we are subject to those types of regulation. So in reality, I can be a state chartered institution, and I might have 3 or 4 regulators that I have to work with, looking at regulations both at the state and federal level. I can be a federally regulated institution, and I can work with 3 or 4 or 5 different regulators, depending on the circumstances. I not only have to follow national regulations, but I'm going to get to state-based regulations as well. State, federal laws are enacted by you folks and members of Congress, but there's much more that goes beyond just what's in the green books. So the best example of this is when we look at supervisory guidance issued by our regulators, it's official interpretations, compliance guidelines, everything you see here listed, okay? Dodd-Frank, which was a bill in response to the Great Recession back in 2010, that bill was several hundred pages long. But the rules and regulations that were promulgated by the agencies were over 22,000. Okay, so it's not only what you do here, you can give DFR, Department of Financial Regulation, rulemaking authority to implement some regulations here in Vermont. A good example of that would be privacy. Privacy regulations issued by DFR not only apply to a state charter, they apply to a nationally chartered institution as well. So even though you're not technically the committee of jurisdiction in the House, that would be the Committee of Commerce. In the Senate, it's the Finance Committee. We interact with all of the committees. In 20 years, I've sat in every committee room. I've engaged in fairly straightforward banking discussions or housing discussions, whatever it may be. I've also engaged on topics that I never in a million years would have thought would come up. Green burial issues would be a really good example of that. What the heck does that have to do with banking? But it did. So you never know where I'm going to show up. Title 8, Title 9, Title 20 are examples of statutes that impact the banking industry. Title 9, I'll just pause there. In some states, consumer protection statutes do not apply to the banking industry in those states, nationally chartered institutions. In Vermont, that's different. They do. So while a nationally chartered bank may say, well, Chris, state legislature, they can't impact us, wrong. If you're dealing in Title IX, very much you can impact us. Is the Attorney General's office our regulator? No. But if they dabble in Title IX statutes and want to introduce something, they very much can be influencing how the banking industry functions. That said, again, you folks have a lot of bills that have come up historically that have impacted banking. What's my role? My role is I'm a lobbyist, I'm an advocate, I come in and I represent the industry. My goal is to make sure that we've got good public policy in the state of Vermont for my bank members to function and to make sure that our customers are being treated fairly, consumer protections, et cetera. How has that worked? The chairman gave a very good example of the homeless Bill of Rights that was discussed, and my role at that time was neither yay or nay, but to let you know that we have a federal regulation that could have run afoul depending on which direction you were going in that discussion. Another example would be privacy discussions we'll have down the hall in Commerce. We have a whole body of privacy regulations, both at the federal and state level, that are already being implemented today that go well beyond many in the marketplace when it comes to your data and the protection of that data. My goal is to come in and educate the committee on all of those regulations that exist, because what we don't want to have is overlay of regulations that create complications for us and that create challenges in the marketplace for us. So I'm going to work with you. I'm going to educate you on the issues that are already impacting the industry, what we're seeing in the marketplace. And again, my approach is a dialogue, a give and take. I like to work with individuals that are open-minded and willing to listen and try and find compromises along the way. Because I don't have all the answers and you don't have all the answers. We're going to figure it out together. The other thing I do very quickly is I work with legislators on individual constituent issues. So if you have an issue come up with a constituent, by all means, seek me out, and I'm more than happy to work with you to try and solve those issues. I will not violate privacy, nor will the bank involved violate privacy, but I make that service available to you. Very, very quickly, and then I'll go into the housing. How has our world changed? It has changed dramatically, just within the last decade. This is how you can bank today. This is how you can bank today. I don't have to go into a branch. Tonight, I can go home and look at all of my accounts online. I can transfer money online. I can pay my bills online. If I'm looking for a mortgage, I can shop for a mortgage online and get plenty of bids, if you will. Not only commercial, but not only residential, but in the commercial world. You have personal finance apps that exist out there. You have payment apps like Square, Stripe, PayPal, et cetera, that are in the marketplace. You have equity finance. It is not just the bricks and mortar of a bank or a credit union on Main Street. It's everybody else that's out there in the marketplace that's doing it across the internet with these devices, okay? It's a dramatically different world today than just a few short years ago. So how does this relate to housing? Housing is a very important component for us. We feel it just like every other industry when we're trying to find housing for our workers, recruit people in the state of Vermont. But let me focus on the customer side of it. What's our role? Well, it's access to capital, whether it's for the individual, whether it's for the developer, whether it's for the agencies that we work with, like a VHFA, like an Evernorth, and other groups that are out there in the marketplace. We have relationships with the home ownership centers. We touch upon a lot of different organizations and entities in the marketplace. We're also equity partners in the marketplace. If you were to go to Brattleboro and look at the Latches House development in downtown, I think it's called the Putnam Block in Bennington. I could take you over to the Upper Valley and have conversations with the co-op up there who's working with Mascoma and the CEO and Evernorth. I mean, equity partnerships all over the state of Vermont because our folks recognize the need to put that type of cash infusion into the deals. You're going to have discussions about what are the obstacles. You alluded to one, Mr. Chairman, and, access to capital. The marketplace is very different today, whether it's the cost of materials, whether it's finding the construction workers, whether it's permitting costs, et cetera. And those have increased so much just during the pandemic, and we're still seeing those increases out there. And the issue is, what's the risk appetite? Does it cash flow? Is there enough money being generated from the project to pay back the loan? And ultimately, that's what we're looking at. Do you have enough money coming out of that project? Do you have enough income as a homeowner to repay the loan? And a nuance of that, which came out of the Dodd-Frank bill, is what's called qualified mortgage, or QM. We have to look at your ability to repay. And if you don't have that ability to repay, it's a non-starter under that federal regulation. So those are challenges in the marketplace. We're going to have conversations about underserved communities, BIPOC community, et cetera, and what more can be done to meet their needs in the marketplace. And rightly so, some things that we need to look at. But then we've got this whole body of regulation standing behind this that says, I need to follow these rules and regulations. And if you come in and you don't meet the criteria under those rules and regulations, it's not because we don't like you. It's not because the color of your skin. It's because you don't have enough income to pay, or you need a secondary signer on the loan, not because we're penalizing you, but That's because it protects, it creates enough security interest in order to do the loan for the individual. So we recognize that we are very much a part of the discussions. We want to be a part of those discussions. We've been having them for several years now. And we will continue to work with you to figure out what are the right public policies that can be put in place to address the concerns that you have in the marketplace. And I will stop there, get out of screen share, and happy to answer questions and be available at any time to work with you folks.
Questions for Chris right now? Representative Krasnow?
Well, first I will say that I opened my first savings account as a kid at Chittenden Bank in Shelburne.
Perfect.
So I remember that. But, is the state, discussions of state bank, federal, state bank, in this committee or government operations?
No, Commerce.
Oh,
Commerce
okay.
does a lot of the banking, does all the banking stuff.
Okay.
But again, we will hear, but they hear from DFR,
Okay.
they hear from all the regulators. It's, again, like anybody other committees, it's grown, so, but it, there are gonna be some pretty snoozy days in that committee just listening to,
Us drone on.
the annual, there were a couple of regulators that I called them morning witnesses because if you
Yes.
had them after 2 p.m.
Yes.
They would get long.
Funny.
But
Okay.
at any rate, that's, thank you for coming in, and I think that it's, so we can wait for specific questions, but those ideas that are gonna address that, we will have these social equity questions. Ban the box was another one.
Yes, absolutely.
Yeah.
The banks were not allowing, or the federal regulations were that we couldn't, they had to know whether somebody had a record in order to
Right.
qualify. them.
And even that world has changed in
Yeah,
a short
we're gonna
year.
go to Representative Burrows, then Labor, then Chestnut Tangent.
Thank you. I was wondering if you could tell me exactly what the federal regulation was that would have sunk the homeless bill of rights, or that sank the homeless bill of rights?
Sure.
It didn't sink it.
It,
The information from Chris clarified
Okay,
that particular section.
can you tell me about the information?
I'd be happy to. So, Bank Secrecy Act, which is a regulation that we need to comply with, it came out of 9/11 because one of the issues under 9/11 was where money was flowing through the banking system and used for terrorist purposes. So the Bank Secrecy Act was an outgrowth of that. Bank Secrecy Act requires that we need to verify our customer. So that you're standing before us and we in fact know who you are, and you provide certain information that we rely on to do that. And one of those is a physical address. And if you're homeless, you don't have a physical address. There is one exemption. It's been a year, so there's one exemption that would address the issue. And that exemption had to do with domestic violence. And if you were a victim of domestic violence, you could use a post office box that was established, I want to say by the Secretary of State, but it involved in some way the Secretary of State's office. Anyway, you would use a non-identifying post office box that your mail could go to and you could get access to it. And that was a valid physical address under the Bank Secrecy Act. But if you don't have a physical address, then a requirement that we provide banking services to a homeless individual would be problematic for us. It would be a non-starter because we could not comply with bank secrecy. There's a can of worms there that I'm happy to answer additional questions at any point.
Thank you, Chris. What is the state's feelings about cryptocurrency and the management of those accounts?
Another can of worms.
Yeah.
Very, very.
Some say it was a barrel a barrel-sized can.
It is. Look, we all read about crypto. A lot of us are still trying to get our heads around what crypto is and how do you value something like crypto. Our position in the industry at this point is one of bringing in experts to work with our banks and educate them about cryptocurrency. Not from the standpoint of whether you're going to dabble in it or not, but rest assured that your customers are already doing it. So the issue for us becomes, Chair Stephen comes in and he wants a loan and his income is crypto-based. How do I value that income? What am I looking at to determine? Because if I'm going in to get a loan, I'm going to provide tax information, W-2 information. I'm not sure how to value it because today it's one thing and tomorrow it's something else. That's something we're trying to learn and understand. If I have an estate that I'm trying to settle, which oftentimes involves banker, and they've got crypto associated with it, how do I value that? And it just goes on and on. We have crypto ATMs out there in the marketplace. I won't share a story with you about the fraud that occurred with one customer in Vermont, but it was not good. But there's crypto ATMs out there. So I was asked by another member of the legislature, what would you offer for recommendations for regulating them? That really is a discussion with the Department of Financial Regulation. I think they would be best equipped, but it's something that people need to go in it with their eyes wide open, because if you're putting your life savings in crypto, you better be prepared to roll the dice that it may not be worth what you put into it. And it's much more volatile than even what we play in the stock market.
Thank you.
Yes.
One last question for Chris.
Yes, sir.
Crypto is like currency that's homeless.
Hey,
So
welcome back, by the way.
thank you. Thank you. So my question, you had a slide about the web
Yes.
finance and
Yes.
players. And in some industries like short-term rentals, they've completely upset the industry, rewritten it.
Yes.
Same with Uber and Lyft.
Yes.
You know, do you picture that same kind of disruption in the financial services or more?
We're managing through it. So when fintechs, as we call them, were first starting up a few years ago, we would very much look at them as direct competitors in the marketplace. Because now if they're providing a mortgage, they're doing everything that we were doing, but are they being regulated the same way? And that's a big question in the marketplace. Now, I think the thinking is shifting more toward how do we partner with some of the fintechs that are out there, because they can be more nimble, they can be more dynamic. And if there's an opportunity for partnerships and it's still meeting a safety and soundness, it's still protecting the consumer out there, then those are partnerships that are expanding in the marketplace. Regulation I touched on. The other issue is, and this is a big question for our banks right now, and especially smaller institutions that don't have deep pockets and capacity. How do you remain relevant in the marketplace? You know, it's no longer, again, just, hoping that somebody comes in your door on Main Street. You've got to have the presence out there on the internet. You've got to be able to meet the needs of your customers who are demanding these types of services and access to services. And investments in technology is astronomical. So you've got to be willing to make those investments and have the expertise to manage those investments. Again, maybe you partner with those who are already doing it. But it is reshaping access to financial services as we speak. There's no question about it. And we're just navigating our way through it and working with our regulators to make sure that they're doing the same thing we're doing. They should be regulated the same way we are, for the benefit of the consumer in the marketplace.
Thank you.
Yep.
Thank you.
Thank you. Look forward to working with you.
We'll see you soon.
You bet.
All right. Next up, we have introductions from Joe Bergeron. Welcome, Joe.
Thank you, Mr. Chairman. And thank you for the opportunity to join you this afternoon and to hear from the Association of Vermont Credit Unions and our credit union family in Vermont. For the record, my name is Joe Bergeron. And for most of you who haven't met me before, my name is Joe Bergeron. I'm president of the Association of Vermont Credit Unions. And so as not to drag things out, everything that Chris said, well, maybe 90% of what Chris said, I could just short circuit everything by saying, yeah, same thing he said. As far as, the regulatory oversight and some of the consolidation issues and so on and so forth. And I'm just going to give you a brief little insight into some of the differences, because everything that he said is mostly applicable to the credit union industry in Vermont and nationwide as well. But what I do want to leave you with is a few little insights as to why credit unions are a little bit different. Credit unions are not another kind of bank. They are cooperatives that provide financial services. But I'm only going to touch on a few little things. And then I want to cede the rest of my time, as I hear in Congress a lot, to Greg Haar, who is the Chief Lending Officer from New England Federal Credit Union. And as the largest mortgage lender in the state of Vermont, we thought that he could provide some insights that nobody else has provided to you so far today, and that I certainly can't, because he's a practitioner in lending and in the kinds of issues of housing that are concerned to you, and I'm not. But first, just a couple things about Vermont credit unions. Chris mentioned to you about consolidation in financial services, and that touches everything in financial services, including credit unions and all the other kinds of sectors that we all touch in our daily lives. When I first started in credit unions in Vermont, it was fall of 1978, and I was a mere 10 years old. That's a joke, never mind that I said that. But it was 1978, and we had 72 credit unions in the state of Vermont. And today we have 17 credit unions domiciled in the state of Vermont, versus the 72 that were domiciled here then. And the difference is between then and now, besides the difference in numbers, is consolidation that's taken place over the years. Some closures that took place during the 80s and whatnot by regulators, but for the most part, it's consolidation. What's a little bit different in the credit union area that is different than what you saw with like the Chittenden Bank progression of acquisitions and whatnot, is that none of those 72 credit unions, or 72 minus 17 that remain today, they're all cooperatives. And so their owners are all the people that do business with them, just like you might be familiar with in a food co-op or housing co-op or an electric utility or so on and so forth. And so because they are cooperatives, there's no subset of people that do business with it, or maybe that don't even do business with it, who are the owners who make the decision to sell or not sell. It's all the people in the organization that make that decision, and they're not selling it, they're merging with another credit union. And so one, a credit union can't be acquired, it can't be purchased by anybody or any other entity. And then two, none of those credit unions that are no longer with us this day have ever moved outside the state of Vermont. The progression from the 72 to 17 has all been ending up with 17 that are all domiciled in the state of Vermont. There are a few credit unions outside the state that have branches, very few, in the state of Vermont. And likewise, there's a couple of Vermont credit unions that have branches, say like in New Hampshire and elsewhere, but all of our 17 credit unions are all domiciled here. So that's a little bit of a distinguishing factor from for-profit institutions. 65% of Vermonters are members of a credit union. And so I'm guessing that just by the odds that a good number of you here are either a member of a credit union or at least have some degree of familiarity with credit unions, even though you might not be a member. And it used to be, and it is now, you can look at most any kind of survey of rates and fees and whatnot, and across the country. And typically you'll find that the rates and fees in credit unions are more advantageous than they are in other forms of financial service providers, and in most areas, not every single one, but in most areas. And the reason for that is because of that cooperative structure. It used to be when we had the 72 credit unions and before that, much like a food co-op, for example, that issues a patronage refund at the end of the year, either through a deposit to an account if you're choosing or by writing you a check. Well, credit unions in the 60s and 70s used to write a check or make a deposit representing your portion of the profit that they made for the year. And even though they're not-for-profit cooperatives, whether you're a cooperative or a for-profit business, any kind of business, if you're not at least breaking even or making a profit, you're not going to be in business very long. So the difference is where those profits go. And in the case of a credit union, it goes to all the people that do business with it, just like it does in the other types of cooperatives. So what that translates to in 2022 is that the 65% of Vermonters who are members of a credit union kept about an extra $42 million or so in their pockets. That's in the difference in rates and slightly better fees, slightly better rates, and so on and so forth. And the economic value that those 17 credit unions provide to contribute to the Vermont economy is about $775 million a year in terms of new loans that they put out there, employment, and so on and so forth. I could go on and on, but that's probably enough for me to lay some groundwork for, what makes credit unions a little bit different. I just wanted to give you a little bit of background on, the organizations that are doing mortgage lending and development lending in the state of Vermont. And the chair and I referenced Greg Haar, who is going to talk to you now about his perspectives and insights as I said, the chief loan officer at the largest mortgage lender in the state of Vermont, and that's New England Federal. It's the largest credit union, and it also happens to be the largest mortgage lender of anybody in the state of Vermont. So he has a lot of experience and a lot of insights from the institution that I hope are insightful for you. And I don't want him to kick me under the table after, but I hope you ask him questions.
Thank you.
built it up much bigger than it's supposed to be, Joe. Hopefully I can answer some questions. So I am Greg Haar, Chief Lending Officer at New England Federal Credit Union, resident of Shelburne. Caleb, I was a 28-year resident of Starksboro.
All right.
Up until a couple of years ago. My wife Beth still teaches at Robinson.
Oh, of course. Yeah. Taught my nephews.
Yeah. And Dennis, I'm an LI grad. Still have a ton of family over there. My mother-in-law is on the board at LI, Sarah Simpson.
Okay.
So, yeah.
Okay, any more degrees of separation?
I'm sure there's others that I probably could tie to here. I think Vermont is
Yes.
sometimes unique in that way that it's a smaller state than even sometimes we think it is. So anyway, just kind of as a background, I got my start in banking 34 years ago, and over that time, I've spent most of my career in mortgage banking. I've worked for a bank, starting at the lowest rung that you possibly can, a junior mortgage loan clerk, worked my way up. I've worked for a whole loan and servicing broker, a independent mortgage company that I joined back in the early 2000s that wanted to go nationwide, and got them licensed in all the states, and took them nationwide and made them pretty successful. Then started my own mortgage company, ran it for about 7 years, and then left to join New England Federal about 13 years ago. First to run the mortgage department, and 5 years ago took over all of lending. So I now oversee mortgage lending, consumer, indirect auto, business lending, credit operations, and loan servicing. So I've seen quite a bit over 34 years. And I try to look at things, with a longer view of time. I lived through, the mortgage crisis, 2008. That's when I was running my mortgage company, and I had sleepless nights and about a couple of years of it, of trying to figure out how I'm going to, make payroll every week and continue things on and make sure that, everybody makes it through. And we did that largely. We did see a lot of, regulation with Dodd-Frank that came through. And, I think, first of all, I guess I want to say that what you guys are doing in terms of tackling the housing issue, it's something that we've gotten to that it's taken a long time to get us to this point. It's a big, big problem. And it's the type of thing that I took a course with Peter Senge at MIT Sloan School of Business years and years ago. And one of the topics that we covered was a concept of dynamic complexity. And it really talks about the interrelatedness of everything and how certain things touch other things and influence them. And this housing issue is a really, really good example of it. And some of the things that you need to think about are, what are the contributing factors? And then, as you start to think about solutions to it, also understanding what are some of the delays and, from a system dynamic standpoint, what are some of the delays that are going to be built into a system? And then what are some of the unintended consequences? Because whatever you come up with, it's probably not going to be perfect. And it probably is going to require iteration in order to get things right over time. So I appreciate what you're trying to do. And I think what you're doing here in listening to people is the very first step. And I encourage you to make as much inquiry as possible before going down a road of trying to solve. So I'll leave that there. In terms of some of the concepts, Peter earlier had talked about the continuum of housing and how it starts, with, shelters and things like that. Then the rental market, first-time home buyers, and then, beyond there. And I think that it's right to look at the entire spectrum of housing. And there's a couple of interesting dynamics within that. If you look at Chittenden County, the vacancy rate within Chittenden County for the rental market is 0.8%, 0.1%, which tells you that there is there's nothing for rent in Chittenden County. And it really goes beyond that to the outlying counties as well. I don't have data to support, what it is, over in the Northeast Kingdom, but I guarantee you it's still going to be challenging up there. Nationally, it's 4.4%. So Vermont as a whole is going to have an issue around rentals. Interestingly, in the business community, office space has a 10% vacancy rate. So as part of a solution, I'll just throw out there that, and this wouldn't work in all communities, but in certain urban areas, converting unused office space or unrented office space into condo projects or other type of long-term housing, I think could be part of a viable solution. It wouldn't work everywhere, but it could be part of something. Where else do I want to go? I guess I'll talk a little bit also about, so Joe had indicated that, we are the number one mortgage lender in the state and really have been. My history in mortgage lending, I had an opportunity to learn what's called secondary mortgage marketing, which really had to do with hedging pipelines and buying and selling packages of loans. So selling loans on the secondary market to Freddie and Fannie and really understanding how to slice and dice portfolios and sell them into the capital markets in order to generate a profit for companies. And one of the outcomes of joining Nephew is we started to produce mortgages and we became successful at selling loans. And one of the things that we said we wanted to do with some of those proceeds that are coming back to us is to give it back to the community. Housing is what made us successful. So we started looking for ways that we could help with the housing problems and put some of it back in. So we started out by donating, I think in the first year, 500,000 to VHFA to put into some senior housing that they were working on. The next year, I think we put it into, I think it was a CHT program. And then I think it was 2019, we gave $1 million to COTS to establish a project actually that they just broke ground on. And then in 2020 or 2021, we made a 3-year commitment of $3 million each for CHT and VHFA to put basically $6 million over the next 3 years into the housing as well. Some of that money with CHT is directly designated to try to work on the BIPOC community to help make housing more affordable through educational programs, grants, things like that. We also, at the credit union itself, have developed our own first-time home buyer program where we actually, one of the things that we discovered, or we talked about what is it that keeps people from owning their own home. And the two biggest obstacles were affordability and down payment. So the way that we decided to tackle that was that we came up with a 3% down payment where we actually lend the borrower the 3% down payment. And as long as they hold that loan for 20 years, and that it's because of a tax rule, if they hold that for 20 years, it's completely forgiven. It's 0% and there's no payment. So as long as it stays out there, they never have to pay it back. The other part is from an affordability standpoint, any loan that has less than 20% down typically requires MI, mortgage insurance. And that mortgage insurance protects the lender against default and having to take the property back and liquidate. So we, out of the proceeds that we earned on previous loan sales, we actually fund up to $15,000 for individual borrowers towards that mortgage insurance. So it doesn't come out of the borrower in any way. There's no increase to the interest rate. It's the credit union itself paying for the MI. And through that program to date, I think we've helped around 250 people get a first-time home through that program. So there's creative things that we're trying to do, and we're partnering with companies like CHT, with VHFA. We're also looking to reach out. I think we're doing some work now with some of the other housing authorities. I don't know if we're working with the Gilman Trust or up in the Northeast, but I know we're working down in Windsor with some of the folks down that way.
CHT is
Champlain Housing Trust, I'm sorry.
Thank you.
Yeah.
You did a great job otherwise. MI was going to send me over.
Mission impossible.
Exactly. For some people, yes. Representative Burrows, we just have a couple
That
of,
was my question,
what?
what CHT stands for.
Okay.
Okay.
No, we're gonna end here, though. I just we have to get to the floor, which is only right
Okay.
press call, but I would like to be able to use you for a resource for what we just talked about very quickly before the
Okay.
hearing, which was understanding personal mortgages and whatnot. I mean, many of us, maybe not all of us, have had to deal with that. Not that we ever understood it, but we had to deal with it. But the thing that I think I would like to have is the idea of some of these business loans, and the idea that if we can't get a loan, if a developer can't get a loan to build, then they're not going to build.
Can I just use one more minute to say a couple of things about that?
Absolutely.
So we do loans for developers. We've actually got 3 good-sized projects in Chittenden County. One that's several hundred homes that are being built. Another one is 40 some odd. Another one's 80 to 100. So we do that type of lending. I will echo what was said earlier, that the permitting cost are one of the biggest factors that are keeping people from being able to afford to develop. And one of the thoughts that I was thinking of as they were talking about doing that, if we're looking at attacking building affordable housing, because that's really what's needed. It's the $800,000 homes. Great, they'll build those all day long and they'll do those. But if we want to build affordable homes, make the incentive for building affordable homes. So if we're going to ease up on restrictions on permitting, in setting pricing on rates and all that stuff, over the years, I've found that you determine what product that you really want to sell in the market, and then you price it at a point that makes it attractive compared to everything else. So if the Mega Million, the jumbo loans are priced here, and you want to develop affordable loans, make it a lot easier to develop affordable loans.
Perfect timing.
Shelburne,
Harper Road.
oh, yeah.